Welcome friends, I am here some PYQs of Economy for UPSC and CUET exams. So first question is Capital Adequacy Ratio CAR is the amount that banks have to maintain in the form of their own funds to offset any loss that banks incur if the account holders fail to repay dues. It is the first statement. You have to consider two statements are given. Second statement is CAR is decided by each individual bank. Now which of the statements given above is or are correct? Options: A first only, B second only, C both 1 and 2, D neither 1 nor 2. Answer is statement 1 is correct. Capital adequacy ratio, which is also known as capital risk to weighted risk. So option A is correct. Asset ratio is the ratio of bank capital in relation to its risk weighted assets and current liabilities. It is decided by central bank and bank regulators to prevent commercial banks from taking excess leverage and becoming insolvent in the process. Simply put, it is the amount of money that a bank has in its reserve to cover any loss. Second statement is not true because it is the Reserve Bank of India that sets norms for banks to maintain CAR. As of October 2023, the RBI has said that all the scheduled commercial banks are required to maintain a CAR of 9%, while the Indian public sector banks are required to maintain a CAR of 12%. Next question is, in India, the central banks function as the lender of last resort usually refers to which of the following? First, lending to the trade and industry bodies when they fail to borrow from other sources. Second, providing liquidity to the banks having a temporary crisis. 3, lending to governments to finance budgetary deficits. So you have to select the correct answer using the code given below. Options are A 1 and 2, B 2 only, C 2 and 3, and D is 3 only. Answer is B, that is 2 only. The Reserve Bank of India was established on April 1, 1935 in accordance with the provisions of the Reserve Bank of India Act 1934. Though originally privately owned, since nationalization in 1949, the Reserve Bank of India is fully owned by the Government of India. The functions of Reserve Bank can be categorized as follows: monetary policy, that for regulation and supervision of banking and non-banking financial institutions, information, credit including credit information companies, regulation of money, forex, government securities markets, as also certain financial derivatives, debt and cash management for central and state governments, management of foreign exchange rate. Next question is, the term core banking solution is sometimes seen in the news. Which of the following statements best describes them? First is, it is a network of banks branches which enables customers to operate accounts from any branch of the bank on its network regardless of where they open their accounts. Second is, it is an effort to increase banks' RBI's control over commercial banks through computerization. See, it is detailed procedure by which bank with huge non-performing assets is taken over by another bank. So options answers are for A 1 only, B 2 and 3 only, C 1 and 3 only, and D is 1, 2 and 3. So answer is A, that is 1 only. Core banking solution CBS is a network of bank branches which allows customers to manage their accounts and use various banking facilities from any part of the world. In simple terms, there is no need to visit the bank or your own branch for banking purposes. So you can transact or do it from any location, anytime. You can enjoy banking services from any branch of the bank which is on CBS regardless of your branch where you opened the account. Next question, with reference to Indian economy, consider the following statements. First, if the inflation is too high, Reserve Bank of India is likely to buy government securities. Second, if the rupee is rapidly depreciating, RBI is likely to sell dollars in the market. Third, if interest rate in USA or European Union were to fall, that is likely to include RBI to buy dollars. Options are A 1 and 2 only, B 2 and 3 only, C 1 and 3 only, and D 1, 2 and 3. Answer is B, that is 2 and 3 only. A central bank such as RBI periodically intervenes in the debt market to influence the interest rate of inflation in the economy. If RBI feels inflation is too high, it will sell government securities and suck money out of the system. This act will push up interest rates in the economy and business will cut back on the capital expenditure financed by loans, reducing the demand for money. So, statement 1 is wrong. Central bank also intervene periodically in foreign exchange markets if rupee starts depreciating. So RBI will sell dollars in the market. This will increase the supply of dollars and the demand for rupees, causing rupee price of the dollar to come down. On the contrary, if rupee is rapidly appreciating, RBI will buy dollars and inject rupees into the economy. This will increase the demand for dollars and supply of money. The statement 2 is correct. Next is, consider the following statement in respect to digital rupee. First statement is, it is a sovereign currency issued by Reserve Bank of India in alignment with its monetary policy. Second, it appears as a liability on the RBI's balance sheet. Third, it is insured against inflation by its very design. 4, it is very freely convertible against commercial banks' money and cash. Options are A 1 and 2 only, B 1 and 3 only, C 2 and 3 only, and D 1, 2 and 4 only. So answer is D, that is 1, 2 and 4 only. Reserve Bank of India defines CBDC as legal tender issued by a central bank in digital form as the same sovereign currency and exchangeable 1-to-1 at par, that is 1:1 with the fiat currency. While money in digital form is predominant in India, for example in bank accounts recorded as book entries on commercial bank ledgers, so a CBDC would differ from existing digital money available to the public because CBDC would be liability to RBI, not to commercial banks. Thank you.